JB here. Hope I was doing outstanding. Thursday, April 10th, 3:20 on this fine Thursday afternoon. Talk quick about the market. Some names I'm looking at go from their S&P down about 3.7%. I just if I, hope the hope was that maybe we'd have somewhat of a normal day today. Maybe just some consolidation. Even if the SPY, S&P, and Nasdaq had some weakness, that it'd be down a percent or 2%, and it has been anything but that. Today, another wild session. Uh, at times so we opened around 5:35 on the SPY, and we were in a green in the overnight hours. So you thought, hey, maybe this is it. We can get some kind of footing. And uh, right after the market opened, we kind of chopped around, and then we just melted from about 9:45 all the way to 12:30 in the morning. The SPY broke under 510 for a minute, found some footing, and then we had the 30-year bond auction at 1 o'clock that came in better than expected, well bid. So that helped treasuries for a little bit. The yields dipped, and then found a little more pressure, and now we've kind of found some support, but still down quite a bit. S&P is almost down 4% here. And the other thing is the TLT. I've been looking at the yields are just it's gonna be interesting, right? And as we're selling off into the late morning, I just start rolling things around, right? I mean, is it have I was saying in the chat room, like, is it have we has the market gone too far now? It's like there's no coming back. This is, did he react too late? It's just all these things you start. It's just crazy stuff. I mean, back if you were around in 2008, even the 2020, we had halts, wild swings, volatility. Um, but in the back of your head, you knew that you had the Fed put, right. You thought the Fed had your back. They did the economy, did Project Twist, did the accommodate, they did QE1, QE2, uh, all these accommodative measures, and that was great. And now it's like here we are in 2025. It's like almost like do they have our back, right? That they use the market to as a bargaining chip. That's to me. It's just like the more I roll things on my head. It was all great with the tariffs, and then just to say, oh yeah, we just did that so we can get people at the negotiating table, which you kind of knew they were doing, but I don't know. There was great. I don't know who shared it. I think it was Howard Marks from Oak Tree Capital had a great interview. I don't know if it was on like Bloomberg or one of those networks, and he had like a great analogy for trade, like global trade. If you want the best things, there's people. It's just how it works. People and folks who are better at doing things, right? So if you want the best Italian food or best pasta, you're not going to go to Florida, to get maybe unless if you have immigrants you get Italy, right? You want the best watches, you're gonna get Swiss, right? It's just how it is. Maybe I'm wrong with that stuff. So, I mean, if you want to manufacture watches in the U.S., I mean, maybe they'll be great. Who knows? They're gonna be the same quality. Same with the pasta, right? So, there's efficiencies in the market. And again, I hope everything works out where things are better, right? You hope the world is better, trade is better, and all that. So, it just anyway, things that just kind of get me a little crazy about this because you're like, do they have our back? So anyway, we'll see how the market holds up here. I mean, you take a look at the trading ranges. This will be the fifth day in a row, I think, over 4% trading ranges. I mean, we were trading 0.4%. And 0.3% back at the end of into November, December. Now we're trading 4% trading ranges, 4.65% today, over almost 11% yesterday, 7% Tuesday, 8% Monday, 4% on Friday. It sounds like the trading range of a penny stock, right? It's crazy, but I wouldn't say it's the new. Hopefully, it's not the new normal, but hopefully we can turn around. I'm hoping there's some deals with Vietnam and Japan. I hope maybe that could be like the thing that starts the market at least putting in a floor and going from there. But otherwise, it feels like if we have a red overnight session and yields continue to go up, and then you start thinking that maybe it's not going to matter what they do now, where it's like a snowball's halfway down the hill and you're not going to be able to stop it. So we'll see. And also, well, we'll see about Fed Chair Powell too. He's already kind of came on this week and pretty much said we're not going to do anything, right? So now it's up to either Trump or President or China to do something. All right. For answer of the day. So, moral of the story is keeping things small. Didn't do much here today. Those Intel was weak at the open. You kind of knew it was going to be. And then once it started trading near $20, my calls were still in the green. So I locked the rest of those in. Didn't want to see that drop. Maybe a name I'll revisit. And then GameStop, and I was talking about GameStop yesterday because GameStop was up 8%. The premiums got destroyed. My 29 calls were red. And then today's kind of like a different story. After the open, the premiums are scorching. Um, I mean, the calls have come back down on my 29 strikes, but not only that, you take a look at the chart, and actually, let me get these up in a second. But the chart is breaking over 50 and 200-day moving average. It hasn't happened since the Roaring Kitty tweets. So we'll see what happens there. But anyway, so overall market, I talked about 525 on the SPY. I wish that held. It didn't. Here we are at 524.91 right now. Maybe I'll take that as a win if we can close around here. Market's still up nearly 4% on the week. So again, I try to take some positives here, and then just take a look at uh, yields, right? Just remarkable stuff over this short of a trading range to see yields go up so much. And like I was saying the other day, like it should be the reverse, right? If the U.S. and Japan and some of these larger economies are risk off asset places, right? The Treasury should be risk off. When it's a risk off environment, markets sell off. Back in the day, Japan's yields would go down, right? Because they're not going to default on their debt. U.S. same thing. So to see them spike, it's not that's kind of like scarier than most any other thing that'd be going on right now. And then this is TLT, and I was wrong. I thought TLT hit all-time lows at 84. It's actually 79 or 78 and change, and that happened back at the end of 2023 when we were in the midst of the higher for longer by Powell, and then finally cut rates 2024. All right, so that's overall market. Here's a GameStop chart, and this is a short-term chart, and you can see that break over. Hopefully, it holds over that 200-day, which is 24.82. I mean, we're at 25.05 here, but if it does, I think it bodes well. GameStop, I think you can do well regardless of what the market does, unless the market really sells off again. If we go back into 400s on the SPY, break 482, it's not going to matter what the company does, right? It doesn't matter if it's just all in Bitcoin and Bitcoin's flat. It's still going to be part of a risk off sell off. But I think if the market finds footing, I think people are going to appreciate it more. Not only that, it's one of those names that can really catch fire if there's any news or catalyst. So really like that one. And again, there was a huge option volume today. Even in the morning when I looked at calls, it was like 160,000 calls traded. Now there's 308,000 calls traded today, only 62,000 puts. So 5-to-1 put to call ratio. I don't know how many of those are spreads or what have you, but of course I can construe that as bullish. And then some other names here, and what's not ironic enough, but like if you look at the charts on Wayfair, RH, well, they call it RH, but Restoration Hardware, I call it. Deckers, they all kind of look similar, like consolidation today, inside day, but the inside day, the candles, Restoration Hardware is down 12%, but as an inside day candle so far. Deckers is down nearly 6% inside day candle. And then you look at Wayfair, it's down, where do I have this up here? Oh, sorry, folks. Yeah, that one's down 13%. Another inside day candle. So in lieu of trying to time some bounce, I'm not going to sit here and just throw money at lottos for tomorrow. But these are names that I definitely, especially if premiums come out overnight and it's tomorrow, I'll be watching for spec calls. But for now, I'm just going to sit on my hands with what I have. Doesn't make sense to chase some of these things. If we do get some kind of news and catalyst, I mean, like I was saying the other day, take a look at Restoration. It could be up another 20% tomorrow. As crazy as it sounds. I mean, the odds of that happening again are probably slim, but it's certainly possible. But I would possibly look for bounces tomorrow if the market finds some footing. And then last but not least, when we were starting to roll, 515 on the SPY was kind of the area I was looking. So I went SQQQ calls were a heck of a lot less expensive than they were yesterday and the day before. So went and got those 50 strikes. It's kind of like an inexpensive hedge. I'll continue to hold those overnight. I won't take much for that. If we do have a sell-off, I think it offers great protection because, obviously you get the double whammy with the premiums going up. And so that's kind of how I'll continue to play things until we find direction, right? And for me, I hope the churns get smaller and the directions to the upside. But if the churns remain big, it's at some point something's going to crack, right? I keep saying that too. Like something's going to break. Either a fund's going to break, the bonds, who knows? And I've said too, 2008, 2000, there was all these, hedge fund blowups, halts, individual stock halts, bankruptcy warnings. All this stuff hasn't happened yet, so that's why it's like you look at a market. I mean, the market hasn't been halted, but it's going to have one of its most historical volatile time frames in history. And it's not even, and the thing is back, the SPY was at 200 like 8 or 10 years ago. Now we're at 500. So not only is the percentage high, but the point difference is high, right? People bring out the Dow, but obviously as the Dow went up, I mean, it wasn't 20,000. As we've had this bull market, it used to be 5,000, 6,000, 2,000. Now, now when they say 2 or 3,000, you got to put it in perspective with how much the market's run up. It's more percentage based, but all right, folks, that's it. Yeah. So for now, I'm going to sit on my hands. I'll just hold on to the GMEs. I still have just a few of those RHs, a few of those Ws for next week, a few of those Deckers for next week, some Rokus for next week. I still have Baidus too, but obviously I need some help on those. But that's in the green today. So what does Baidu, Baba, and some of these China ADRs look if there's some deal hatched out that's positive for both sides? I could see some of these China ADRs going up 15, 20%. On any positive news. Anyway, folks, that's it. Let's have a great day. I'll be back. Rock and roll.